Good morning and good afternoon for everybody. It is a great opportunity to gather you all here for reflecting on the immediate and long-term effects of the COVID-19 pandemics, its impacts upon national polities, as well as upon the international system. For that, I have to express my gratitude to SAIA and to the Konrad Adenauer Foundation for partnering with us in such exercise. Throughout this partnership, we will host two webinars, this one today, which discusses the responses and assesses the socio-economic impacts on four countries, Mexico, Brazil, Nigeria, and South Africa, and another one next Tuesday, where we will have a conversation on the pandemic's impacts on the international order, the governance architecture, and the challenges ahead of us. This is a time of huge loss for all of us, and things couldn't be more complicated. We have three layers of troubles piling up and contributing for making the responses to this pandemic even more challenging. We are living in a time of power transition within the international system, a time of rising nationalisms and authoritarian rulers, and a time of unprecedented inequalities. Assembled, these three dimensions form a kind of a petri dish, which enables the spread of the virus. I'm still under the impact of a conversation we had last night about the situation in Rio's favelas. Under the pandemics, the favelas are the best testimony not only of Brazil's inequalities, but the world's inequalities. As many epidemiologists are saying here in Brazil, inequalities have transformed the risk profile of this disease. Here in Brazil, race, gender, and class are almost as important as age in previous diseases. Here in Brazil, we are asking people to wash their hands, but they don't have water in their homes. We are asking people to social distancing, but they live 4, 5, 6 of them in houses with 4, 5, or 6 square meters. So it is impossible to keep distance. It is impossible to wash their hands, and they don't have jobs. They have to work through the day to have some food at night, and they are hunger now. They are living in a hunger now. Our conversation here will try to look at these processes throughout the lenses of middle-income peripheral countries. At the end of the day, the question we have to answer can be summarized as a young man asked on the internet, now what? It is important to understand how these countries are responding to the COVID-19 pandemics in terms of humanitarian actions, public health measures, social protection policies, and economic packages to protect jobs. But it is also important to figure to where we are heading on and to where we should head on. In this sense, the very idea of a new normal is not enough to cope with the challenges posed by the pandemics or by the other pandemics that we have ahead of us, by the climate change or by global inequalities. We have to build another normal, a normal that would appear to our eyes as abnormal, as something that we could not expect, but a normal that would create an order that could cope with all these challenges that now defies the existence of the humanity itself. Before I pass the floor to Elizabeth, two remarks on housekeeping. You have on the bottom of your Zoom, you have a button for a chat. Through this chat, you can make larger remarks and talk to each other. And you have another button of a Q&A. What I would like to ask you is to use this Q&A button to ask objective questions that we are going to group and pass through the moderator who will ask these questions to the participants. So without any further ado, sorry, I will pass the floor to Elizabeth Sideropoulos. Thank you, Elizabeth. Thank you for partnering with us in such a fantastic event. Thank you.
Great. Thanks, Paulo, and good morning to all our Brazilian and Latin American participants, and of course, good afternoon to those joining us from South Africa and other parts of the continent. It's really a great pleasure to be collaborating again with the BRICS Policy Centre and with Paulo and his colleagues there, and to be actually discussing a topic whereby the comments that Paulo made just now highlight how many areas of similarity, both in terms of context, particularly in terms of context, although perhaps the responses have varied, we have in discussing the socioeconomic impacts and responses related to COVID-19. I think we are facing a situation that perhaps in many ways is a perfect storm, just to take forward the point that Paulo made now in terms of the triangle. It is raising both significant questions about our governance frameworks nationally, but also about our governance frameworks internationally and regionally. And those two dimensions, of course, are going to be the focus more specifically of the second webinar, which we'll hold next Tuesday. I think just to make one other remark, and that is really to say a very big thank you to the Konrad Adenauer Stiftung and to Henning Zur, who I see on the screen now, with a beautiful picture of Joburg behind him. I need to make a plan and have something similar next time. The Konrad Adenauer Stiftung has been a long-time partner of SAIA on many research endeavors as well as public engagements, and we're really glad we were able to collaborate with CAS and with BPC in bringing this to you. Let me leave it there, and let's look at what we can learn from what has been happening in South Africa and Nigeria in terms of the response over the last several weeks, and in Brazil and Mexico. And I think it will be a very rich set of comparisons, both in terms of responses as well as in terms of impacts and thinking. So let me then hand over to Nanya Berlemöller, who is also an old friend and colleague at the Human Sciences Research Council, and has also been in the past a visiting fellow, I think, at the BRICS Policy Centre. So I think connections on both counts, who Nanya will be moderating the discussion. We look forward to it. Thank you all very much.
Thank you very much, Elizabeth, and welcome to everybody. I think we all know the gravity of what we are going to be talking about today. And the fact that we are sharing information is essential. We are all in this together, and therefore we can learn from one another, mistakes and challenges that we are facing. And we have four speakers today. Each speaker is going to be doing a 10-minute presentation so that we can have some time for discussion as well. And as you have been reminded, please post your questions under the question and answer section on Zoom. So I'm going to introduce each of the speakers, and then the speakers will be speaking in this order. And then afterwards, we will have the question and answer session where we will have blocks of questions that will be sent through to me and that I will pose to the panel. But even before that happens, I myself will also pose a few general questions to the panel. So to introduce the panel to you, from South Africa, Marius Oosthuizen will be speaking first. He's from the Gordon Institute of Business Science at the University of Pretoria in South Africa. And I'm also in Pretoria, so I should have a picture of a jacaranda behind me. We then have our other African speaker, Amara Erukuche. She is a research associate at the Center for the Study of Economics in Africa, based in Nigeria. The third speaker will be from Brazil, Lena Levanas. Lena is currently a member of the School of Social Sciences at the Institute for Advanced Studies in Princeton. And our final speaker who will be speaking about Mexico and the situation there is Juan Carlos Moreno, who is a full professor in the Faculty of Economics at the National University of Mexico. So I'm going to hand over to our first speaker now. Marius, I think you can take the floor.
Thank you, Narnia, and thank you, colleagues, for the opportunity to share, and I look forward to the engagement and the discussion. What I'm going to do in the next 10 minutes is share with you briefly some of the work we've been doing using scenario planning, looking at this issue of COVID in Africa. And what we'll do is we'll talk first at the sort of macro global level, and then move down to a meso level, thinking at the sort of city level, and then come really granular and think about the impacts on individual Africans in the context in which we find ourselves. In order to do that, I'm going to share a few slides just in a sort of rapid fire way that will communicate some of what I want to share. The first is a slide that we created quite early in the pandemic. This was at the end of February, beginning of March, where we were contemplating the systems dynamics of the pandemic and how the pandemic rolls itself out at a global level. And what we said during the early stages when we created the slide is that, of course, the pandemic started in the Asian context, but that it would move fairly rapidly into Europe and then into the US by virtue of the way in which the globe is connected through airline travel, global trade, and the movement of people. And that in that context, it's likely to come quite late to Africa. What we're saying through that is that the disease burden has come to Africa and to South America, in this case, last compared to the rest of the world. But the economic impact came to Africa as early as it did everywhere else. So how did we see that? We first saw that with a supply chain disruption from China, with the demand side collapse for commodities, the supply side collapse in the Chinese economy because of the pandemic, followed by the infection spreading, and that would lead to a lockdown in Europe and America, similar to what we saw in China, and that would lead to a slowdown in the economy. So this is, if you bear in mind, this is quite early in March, where we anticipated that this is likely to happen in Europe, the US, and then Africa, and the same would be true of South America. Now, at the time, we understood that that is likely to lead to a disease burden on the one side and an oil price collapse on the other as the disease makes its way through, the impact of it makes its way through the economy. And that on the back of those impacts, we're likely to see in South Africa and elsewhere in Africa a currency crisis as well as a fiscal crisis. Now, why did we say that? Because African countries on the whole have, over the last decade to 2 decades, become increasingly indebted at the sovereign level. And we've seen weakening of emerging market currencies as concerns have grown about the fragility of the recovery story in the global economy. Now, the questions we had at that time was, first of all, whether this would lead to a sell-off in markets. And we certainly did see that. The initial wave of impact was a big sell-off in the stock markets around the world. We've seen some recovery in that regard. But we also wanted to know whether this would have a major social and political fallout, and to what extent that would lead to social and political turmoil. Now, if you take the current state of the pandemic in Africa against that backdrop, you probably would agree that we've seen most of these impacts already take place. Certain countries like Angola, Nigeria being very exposed to the oil price collapse. Countries like South Africa being confronted with a fiscal crisis, having to borrow from the World Bank, the IMF, and other institutions. But we haven't yet seen the full extent of the social and political fallout. Now, in addition to that, what we did on the basis of the systems analysis was to think about the 3 waves in which the pandemic would affect Africa. The first wave being largely an economic wave, leading to uncertainty, volatility, supply chain disruption. The second wave being that of a disease burden with social distancing, somewhat of a psychological strain on the economy. And we did foresee at the time that there would be a very large virtualization of the services economy as companies moved to the online environment during the lockdown. And then the question, of course, is how long will it take for us to get into the third wave where there's an adaptive response and where there's some kind of fiscal restructure and we begin to see the emergence from the crisis. Now, what we did is we ran this as a workshop with 120 venture fund capitalists as well as fund managers. And we asked them, do we think this is going to be a V-shaped recovery, which is a few weeks or a few months? Is this a U-shaped recovery or is it an L-shaped recovery, which takes much longer? And the consensus view at the time, this is during March and April, has been that this is going to be a U-shaped recovery, which means we spend probably the remainder of 2020 in this middle phase where we have a growing disease burden, growing social pressure, and then, of course, the economic impact of this. Now, when we thought about that at the continental level and said, well, what are the different scenarios that this could play out as in Africa? There really were 4 scenarios that arise from the different uncertainties of the rate and scale of infection versus the scale and effectiveness of the societal response to the pandemic. In other words, if you have a small scale infection and you have an inadequate response, that's really irrelevant because it's a storm in a teacup. And we think that African countries have largely spent time in this top left quadrant where the pandemic has been a storm in a teacup. There's very low levels of infection, except for the global impacts. The impact hasn't really hit home yet. Now, that is starting to change quite quickly. And we think South Africa in particular has moved from a storm in a teacup down into this perfect storm scenario. The perfect storm scenario is a scenario where the infection rate begins to grow and the societal response is inadequate to combat that infection rate. And we do think that other countries with similar spatial dynamics to South Africa, in other words, high levels of urbanization, high levels of city density, low levels of poverty or high levels of poverty or access to water and sanitation, countries with similar spatial environments will also go into a perfect storm scenario. Now, let me say that there is the possibility that some kind of vaccine breakthrough or therapy breakthrough or a surprise such as that the TB vaccine has an unexpected effect on the virus, that Africa could move into the Africa spared scenario where in a paradox, Europe, the US, and other markets are deeply affected, but Africa is relatively spared because of some of those unknown health factors. We don't think that's the most likely scenario, but we certainly think that is a probable scenario. One more thing to say about the macro context. We then did an analysis of the economies in Africa that are most vulnerable from an oil price point of view, as well as the countries in Africa with the weakest health system. Now, to give you a sense of that, South Africa has about 4 beds per 1,000 people compared to Mali that has a 0.1 bed per 1,000 people. Now, when you juxtapose the economic vulnerability and the health system vulnerability, you really see that diagonal of vulnerability from Sierra Leone, across Nigeria, Ghana, all the way through to Mozambique, really being the countries that are both vulnerable from an economic as well as a health point of view. I want to share 2 more slides and then I'll end my initial input. The first is, what does this look like at a granular level? We've identified a series of key vulnerabilities that we think are true across Africa. They relate to things like poor water access, rising political conflict, slow and exclusionary economic growth, ballooning informality, increased density, complex government environments. So really there's a basket of political, economic, and social aspects that worsen the potential for the disease burden, particularly in the African context and where African cities are involved. And then I'll finish my initial inputs, and we can, of course, circle back to these by just showing you a visual of what this looks like in South Africa. So I live in a wonderful suburb in the city of Tshwane or Pretoria, but 4 kilometers from where I live, This footage was taken a week ago of my neighbors queuing for food parcels. This is about 4 kilometers of people queuing with 0 social distancing, 0 masks. And the reason they're queuing is they're in the informal sector and haven't been able to work for a period of 6 weeks. And so they're at the point where food insecurity is becoming their greater concern. And so between health insecurity and food insecurity, we then run the risk of this developing into broader types of security. And I think that's probably true in South Africa as well as other African countries. Let me leave it there and then we can circle back for the discussion. Thank you.
Thank you very much, Marius. That was intense and very, very brief. So thank you for keeping to time. And I do think that we will circle around to these really essential conversations that we are having at the moment. So let's move on to the next speaker, Mara from Nigeria, and hear from you what is happening there in Nigeria.
Hi, everybody. So today I'll be taking us through the economic responses that have been offered by the Nigerian government, and I'll be focusing just on Nigeria. So just to give us a brief background on the economic climate before the pandemic set in. In 2016, we were hit with a recession due to the 2014 oil price shock. And so we were just recovering from that recession. In 2019, our GDP growth rate was about 2.3%. And the IMF revised the growth rates for 2020 from 2.5% to 2%. So currently, Nigeria has the 6th highest number of cases in Africa, with 2,802 confirmed cases and 93 deaths recorded. Initially, the government imposed full lockdown measures in 3 states, Lagos, Abuja, and Ogun states, which happen to be economic hubs in Nigeria. However, the lockdown measures have been tapered down a bit, but other states also adopted full or partial lockdown measures. In addition, travel across states have been banned. Like other countries, industries such as aviation, hoteliers, and tourism have been hard hit. However, for Nigeria, it happens that our major trading partners are among the worst hits globally. So China, India, and Turkey, countries that we trade both in oil and non-oil exports, they have been the worst hits. In addition, the fall in global demand for oil has also affected us severely. Oil accounts for about 60% of our government revenue and about 95% of our foreign exchange. So the Central Bank of Nigeria has had to devalue the naira from about 306 naira to 350 naira, and we expect further devaluations in the future. In addition, we also expect an impending food security crisis. So the ban on intrastate travel has made it such that there's been a reduction in food, there's been a reduction in available food, and also a lot of households' income have fallen, given that a lot of people are no longer working. Lastly, the informal sector accounts for a huge proportion of Nigeria's economy, about 65% of Nigeria's economy. Businesses such as artisans, those who sell in the open markets, they have been severely affected by the pandemic itself. The government has responded using both fiscal and monetary tools. There are cash transfer programs to vulnerable households, about 20,000 naira, which comes down to 50% tax refunds are being made to businesses that do not retrench staff between now and the end of the year. And additional funds have been made to sectors. However, the health sector has been the priority of the government. For the monetary policy responses, the CBN, the Central Bank of Nigeria, has revised interest rates from 9% to 5% and has also given a 1-year moratorium on all existing CBN interventions. They've also injected money into the banking system and also provided credit facilities to SMEs, manufacturing sector, and the real sector as well. So assessing the extent to which these policies deal with the pandemic itself and the impact of the pandemic on the economy, although there's the existing cash transfer program, given that a high proportion of Nigerians are unbanked, it's been difficult for the cash transfer program to be efficiently executed. So almost 40% of Nigeria's adult population are unbanked. And as such, the 20,000 naira that is being provided, it only goes to a small proportion of the population. Also, the lockdown measures are severely affecting businesses given the high level of informality in Nigeria. As I highlighted earlier, about 65% of our economic output is generated by the informal sector. Now, the fiscal measures do not include tax relief measures. So as it stands, both individuals and businesses are being required to continue to pay tax, despite some businesses not making any profits. Also, the fiscal stimulus that has been provided is considerably low to counteract the fall in private sector spending. Currently, it stands at about 0.3% of our GDP. And the fiscal stimulus programs are heavily focused on health sector. A lot of the liquidity being injected to other sectors are loans, which may prove difficult to pay back by the time the pandemic is over. However, Nigerians have found opportunities from the pandemic. So the credit facilities that are being provided, it's enhancing local industrial capacity and has the potential to make for import substitution. So Nigerian producers are producing PPEs, ventilators, and other medical equipment that are required to combat the pandemic. However, for this to be sustained, legacy issues such as inconsistent power supply, poor infrastructure, and inefficient bureaucracy will have to be addressed for this to be sustained. In addition, the pandemic has strengthened the country's digital economy as businesses are adapting to provide remote services. Public institutions such as universities have also incorporated virtual infrastructure and are now providing online courses. It has also made us to be less reliant on global supply chains as producers look inwards. Although the pandemic has had devastating effects, we've managed to realize some gains.
Okay, thank you very much for your presentation and for sharing with us what is happening in Nigeria. I think there are some measures that are similar to the ones that we're adopting in South Africa, but there are also differences, and maybe we can interrogate some of those. And I'm hearing from you some interesting ideas that perhaps need to be taken into consideration in South Africa and on the continent generally. So thanks so much, and I'm sure that we're going to have a vibrant conversation. Really appreciate it. So we're going on to the next speaker now, which is Lena, and she'll be speaking about the situation in Brazil.
So good morning or good afternoon, depending on where you're based. I'd like to thank the SAIS and the BPC team for inviting me to participate in this panel, which is both timely and extremely relevant to help us better understand the so many dimensions of our lives that have been challenged by this global pandemic. I think it's scary to realize how profoundly and abruptly our routines have been abandoned. More than ever, the sentence, "no one knows what the future holds," I think it's resonating, especially now that scientists have warned that the COVID-19 is deadlier than expected, that new waves may occur, and that the list of symptoms related to this disease goes well beyond the most common, such as fever, headaches, body aches, and pneumonia. So I understand that we are supposed to assess the response and impacts to the COVID-19, but given that we're still in the midst of this global pandemic, What I'm planning to do here is just provide you with a broad picture of what is going on in Brazil so far. So I'll take 3 quick steps because I suppose that you're relatively well informed about Brazil, given the scandalous mismanagement of the coronavirus outbreak by the federal government. So first, let me give you the political context in which the pandemic is spreading, which is extremely troubling. As global media outlets highlight every day, President Bolsonaro continues to deny the severity of this outbreak that he associates to a little flu. He insists that the press and those who oppose his political leadership are intentionally provoking mass hysteria as part of a conspiracy against him. Of course, this makes it very difficult to handle the pandemic. After having campaigned for what he called a vertical confinement to be limited to those over 60 years old in order to avoid shutdowns across the country, President Bolsonaro now challenged the figure, saying that most deaths reported are not COVID-19 related. Last week, when asked if he would take action to curb the mounting death toll, he replied angrily, "So what? I can't work miracles, despite having Messiah as middle name." A few days earlier, he said he could not talk about deaths because he was not a grave digger. Every other day, he joins his supporters on the streets, violating social distance norms without wearing a mask, often coughing and always shaking hands and hugging people. He tells ad nauseum that the economic crisis that will follow the coronavirus outbreak will kill far more people. Like Trump in the US, Bolsonaro is calling for the immediate opening up of all states whose governors, running counter his will, decided to put forward restrictions to prevent the humanitarian catastrophe to be even worse. This is the case of the states of Rio de Janeiro, São Paulo, others in the Northeast regions. Therefore, we have a piecemeal approach with guidelines that differ from state to state. In the middle of the pandemic, Bolsonaro fired the Ministry of Health, a physician whose popularity in providing basic guidelines to the population to fight the pandemic made the president feel that his political prominence and authority were being undermined. The new minister comes from the private sector. He's a top consultant working closely with institutional investors and big pharmaceutical companies. Yesterday, a video went viral showing that he failed to put on his coronavirus mask prior to entering a meeting. Generally speaking, people don't trust him. This week, more than 40 Brazilian scientific institutions have uttered the minister to deliver an emergency plan to bend the curve of the pandemic, but so far we haven't heard from him. All this to say that we don't have a comprehensive and coordinated national plan that could significantly reduce the contagion effect. Despite knowing in advance that the pandemic was lethal, the federal government did not firmly engage in minimizing the mortality risk of COVID-19. The peak of the pandemic is expected for late May. In big cities that concentrate most ICU beds, the hospital capacity either has already been reached in full or is over 75%. In Rio de Janeiro, because hospital capacity has reached 95%, the governor has issued a 24-item norm stating who should be prioritized in ERs. Those over 50 years old, for instance, are supposed to be left out. This is kind of a liability shield to protect doctors that will have to make tragic choices. Local lawmakers have opposed this decree, but so far it remains in place. Let me give you now some figures on the spread of the coronavirus. Yesterday, Brazil's official death toll surpassed 7,300, a number that is vastly underestimated. The number of fatalities is certainly far higher than reported. According to the Imperial College, it could be 10 times higher. Scientists from the University of São Paulo consider that they should be 12 to 15 times higher. Therefore, the real death toll may range from 73,000 to 100,000. How can we explain this? Thousands of deaths due to respiratory failure, for instance, are not classified as COVID-19 because testing is unavailable. Their number climbed 1,250% in Rio de Janeiro in 24 hours a few days ago. Without testing, the majority of coronavirus fatalities are not classified as such. As regards the number of confirmed cases of coronavirus, according to the Ministry of Health, the total amounts to 1,000, around 1,000 as of today. Again, the figure reported may be a small fraction of the reality, just around 10%. It's very likely that the number of cases exceeds 1 million across the country. Why such a gap? Because Brazil has the worst RO among 48 countries, 1 to 2.8. This means that one person can infect 3 others. When RO in the population is greater than 1, the infection will spread exponentially. If the RO is less than 1, the infection will spread only slowly and will eventually die out. The basic reproduction number, which continues to be high, did not prevent local governments, however, from announcing that they will be soon lifting restriction measures and easing stay-at-home orders. Non-compliance with social distance is getting more frequent. People need to work and they are getting tired of staying at home, which will lead social distancing scores to drop. What may happen is a huge increase in transmissibility levels with dire consequences for the population in general. There are no reliable projections on how the pandemic will play out because there are no common guidelines and no effective action nationwide. Since there is no mass testing due to lack of inputs and no capacity to process the tests, it's impossible to lower the reproduction number for now. According to El País, Brazil has tested on average 30 individuals per 100,000 inhabitants. Vietnam has tested almost 800 per confirmed test. Jornal O Globo reported this morning that the majority of coronavirus cases now affect young people aged 20 to 39 years old. Moreover, Brazil stands out as the country with the largest share of deaths of people under 50. Brazil did not implement restrictions to control entering the country. There is no body temperature checks in airports nor strategies to quarantine those coming from abroad. All these measures have been successfully implemented in Vietnam, whose economy cannot be compared to Brazil's. Argentina has closed the borders until September 1st, and President Fernandez is successful preventing the spread of the virus in the country. The death toll is very low. In Brazil, conversely, the government has not laid out a plan to guarantee that vulnerable communities and poor areas won't experience food insecurity, for instance. The attempt by public healthcare practitioners to issue a universal waiting list to centralize and better share the supply of ICU beds has failed, unfortunately. This is important because 60% of ICU beds in Brazil are located in the private sector, available only for those who enjoy private insurance plans. In Brazil, we have 1.7 beds for 1,000 inhabitants, and most of them in the private sector. Other suggestions like strict lockdowns have also been turned down. For now, funding approved by Congress to the health sector has not been fully delivered, only 40% of it. Therefore, the Brazilian public unified healthcare system is not operating at its full capacity and is lagging behind. So I guess I'm going to stop here now because I think my time is running out. And maybe I can address issues relating to the relief package during the Q&A time. Thanks.
Thank you very much, Lena. We read about what is going on in international newspapers, but when you hear it firsthand, it is deeply distressing. And I think that we do need to speak more about this, and I wish that we could find some kind of solution, because I know many of my friends in Brazil are very fearful of what is happening. So thank you so much for that, for sharing that information. We're going to now go on to our final, but not least speaker, Juan Carlos from Mexico.
Juan Carlos, you're on mute. We cannot hear you.
Then again, so thank you very much. I'm sorry. Thanks for the invitation, and I enjoyed very much the presentations of the previous speakers. I don't know whether the word is enjoy, but anyway, I liked very much the presentation. The situation that you describe is not precisely to be enjoyed, but anyway. Mexico is right now in phase 3 of the pandemic, which means that we're still looking at the upward phase of the curve. We really don't know when it will peak. As one of the previous cases, we don't have massive testing, so the rate of contagion is that number is rather a fiction. We do know that at least 2,500 people have died of the COVID, but we don't know whether there have been pneumonia, what they call it, atypical pneumonia deaths related that are similar to, related to COVID. So I don't know. But what I do know is that our economy is headed to the worst recession in modern ages in 90 years. We have to compare this to the 30s, last century, the previous century. Why is this happening? Why is Mexico being hit so hard by this pandemic? Well, first of all, we have 3 reasons. Essentially, well, as you well know, Mexico is a balance of payments constrained economy. That means that foreign exchange, the inflow of foreign exchange determines very much the rate of growth of output and everything else in particular. And this pandemic and its repercussions on the world economy have hit every single item of the balance of payments in Mexico: remittances, export, tourism, oil, foreign direct investment, the volatility of short-term capital flows, you name it. In addition, we have been recently downgraded by Fitch and Moody's, the international credit rating agencies, on our performance of Pemex, the most important oil company in Mexico. So this is the United States, our main partner in trade, and now, which we have now signed another new agreement, is bound to its worst recession also in decades. So this is the worst blow that we have had in many years. But in addition, how was Mexico before this blow? Well, Mexico was already in a long-term period of slow expansion, a rate of growth. Since we started implemented market reforms in the middle of the 1980s, we haven't been able to really detonate a dynamic curve for the Mexican economy. GDP per capita relative to the United States, that gap has been widening. We are among the slowest economies in Latin America in terms of GDP expansion. And in addition, last year, it was the first year of a new president of a new party, Andrés Manuel López Obrador, now left-wing party. I really don't know by now what we mean in Latin America by a left-wing party, but anyway, I'll go back to that later. And Mexico was already in a recession in 2019. For the first time in many years, GDP per capita declined. And the only dynamic component of demand was exports, because even though the world trade was very weak, we managed to profit from the trade disputes between China and the United States. We gained participation in the US market. Private investment declined massively last year due to, in particular, not exactly the incoming of President López Obrador, but some of the decisions he took, canceling very important investment projects and having this banter against the private sector, which has not helped at all. In addition, public investment has been cut at a rate of 5% in real terms in the last 6-7 years, and López Obrador's new government has not done anything to change that. In fact, in his national program for development, he forecasts a decline in public investment because he wants to, except for 3 major projects, but he wants to focus on other issues. Most importantly and most worrying is that López Obrador, I don't know where he learned economics, but he's very much in favor of austerity. He thinks that an austere government is the best thing that a nation can have. And he decided, and this is the 3rd reason why Mexico's economy is heading, it's like the Titanic heading towards the iceberg. And I don't know whether we have already hit the iceberg or not, but here it goes. He decided that he's going to maintain the same budget that was drafted in September 2019 for the Mexican economy's performance in 2020. But in September 2019, we didn't know a thing about the COVID virus, and we didn't know what was going to happen to the US economy. And in spite of that, he has committed himself to a primary surplus. He changed the primary surplus objective, fiscal primary surplus of 0.7% of GDP to a deficit of minus 0.4% of GDP. And that change is basically due to what is forecast to be a decline in tax revenues due to the collapse of the Mexican economy. We are forecast, the optimistic figure is a decline of 7% in GDP for this year, but some of the figures go way up to say 12%, 30%. With in the last 3 weeks, we have had a loss of 400,000 jobs, and in spite of that, Mexico is committed in the fiscal policy. He's slashing the wages of the public sector. He's cutting public expenditure. He is increasing the tax collection. So whatever you learned about the 1930s recession, the lesson was not driven to Mr. López Obrador. He hates the word counter-cyclical. He hates the word foreign debt. He hates the word fiscal reform. So without fiscal reform, having one of the lowest tax revenue figures relative to GDP in Latin America, we are bound to have the fiscal policy is going to deepen and make it even more prolonged the recession in Mexico. The only response that has been, it's very strange because the monetary policy is actually very, very flexible and very lax. Interest rates have been reduced. The central bank is taking a very active role in promoting credit to the private sector, but through private banks. But so you have, like driving a car, stepping on the accelerator on the monetary side, but stepping on the brake on the fiscal side. And what about social policy? Social policy, López Obrador's government has not designed or not contemplated any change in the social policy that he had devised for Mexico last year. So he's not considered any new social transfers or social support program for this scenario. So what he thinks should be the concern of the government is the long-term structural poor. So he thinks that there's no need to have any change in this, which is very, very worrying because we are really seeing the experience of Mexico is that when we have a big decline in GDP, obviously employment declines very much, not so much formal employment, but also formal employment, but we have a 50% informal percentage of people working that are in the informal sector, and we don't have social networks that are really capable of coping with this tragedy. What is even more puzzling is that López Obrador insists on fiscal pro-cyclical policy, even though his party Morena has already drafted a counter-cyclical program, which is very, very interesting. His Minister of Finance has already drafted and published another counter-cyclical program. So right now, it's we really don't understand why López Obrador is pushing in this direction. I'm telling you, he's a very, very powerful president, the most powerful president in decades. So my only hope is that the decline is grave enough so that López Obrador changes his mind soon, but not so grave or not so severe that when he changes his mind, there's nothing else to do. What Mexico should do afterwards, it really depends what's going to happen in the next few months. The figures that were released on employment, I thought that I and other economists thought that López Obrador would change his mind on what should be done, and he hasn't. He doubled his bet on austerity. It's the first time in my life that I've seen all economists in Mexico, from the right wing to the left wing, we all think that the policy, we are all in the same opinion that López Obrador fiscal policy is a big mistake, but we don't know how to make him change his view. We are working with politicians in the Congress, but right now Mexico is headed for a disaster, and in part it's an externally made disaster, and in a very important part it's a self-made disaster that we're facing. Thank you very much.
Thank you very much, Juan Carlos. Again, a very distressing presentation. And not much is really known about what is happening in Mexico. So I think that this was really informative. And something that's jumped out to me, I'll turn to the questions that are coming through shortly. And there are a lot of questions about economics. So I'd like to encourage people to ask questions about issues other than economics. But what's really jumped out at me is that each of the countries that we've been speaking about have slightly different or very different approaches to COVID-19. I know that South Africa and Nigeria, it appears, on the continent are taking it very seriously. South Africa has been seen to be almost too restrictive in its response to COVID-19. We're far away from actually opening up the lockdown. We're easing it. We're now at level 4, but still very restrictive, limitation on rights, and so on. Nigeria, I heard yesterday that Nigeria will be opening up slightly. But we can hear that from the Latin American side, specifically now from Brazil and from Mexico, that the virus isn't being seen as seriously as it is on the African continent. And so there's not sufficient testing being done, and therefore not really any knowledge about how to respond. But at the same time, the economies are suffering, and I think all our economies are suffering. So that is something interesting as well. Different approaches by each country, but each country's economy is suffering severely, regardless of the approach to the lockdown. And I'd like each of the presenters to just give me some ideas as to why you think there are these differences, or how we can ensure that we have some way of understanding this economic issue, probably more as a global one than as a national or a regional one. So I'm just going to ask you to speak in the order that you spoke initially, and just address some of the issues that I have raised now.
Thank you for that, Narnia. I think coming to the question, it's helpful to reflect on how this crisis is similar to the global financial crisis, and how this crisis is different from that crisis. So you would remember that the global financial crisis started as a financial system problem with the collapse in liquidity because of the property market problems in the US. And that financial system crisis then had an impact on the real economy, dampening demand and creating a global recession. What makes this crisis different is that it did not start in the financial system. It really started in the health system. So I'm going to just take a minute here to share a slide where we've done some thinking about this problem, and it will talk directly to the question of the economic dimension. What you're looking at here is a very simple portrayal of how the financial system at the top and the financial markets associated with that on the second line provide the liquidity into the equity markets and the real economy, and how those are underpinned by the households that, of course, drive demand. Now, in the global financial crisis, the global financial crisis started at the top of this dagwood and made its way into the real economy. What's different about this crisis, it started at the base of this as a health crisis that then led to a lockdown, which has basically created a spasm in the real economy, and that has led to a crisis in the equity markets. Now, the medicine that governments have given to this problem is to print money, to use quantitative easing and other fiscal measures to drive liquidity from the top. In other words, the Federal Reserve, for instance, in the US, has taken more assets onto their balance sheet than any time in history as a way to prop up the equity markets while we wait for the lockdown to go away. But of course, during that time of the lockdown, in reality, we've lost the demand and the consumption that was driving the real economy. And the inevitable consequence of that will be the closure of businesses and the loss of jobs. And let me say finally that the way in which different countries are affected depends on the way in which their economy is dependent on the demand side in the global economy, and to what extent their internal consumption is able to bring that economy back online once the lockdown ends. Let me leave it there for some other inputs.
Thank you, Marius. Any other inputs from panelists?
Yeah, so, Nanya.
Yes, please proceed.
Okay, so the lockdown measures have slowed down economic activities through three main channels, right? So there's been a demand shock where consumers are now focusing on just essential commodities. So food, face masks, hand sanitizers. A lot of people are just focusing on that. People are not making long-term decisions, right? Then also a supply shock where businesses have been shut down. So the production of goods and and offering services have been greatly reduced. Restaurants, movie theaters are obviously not open. And also a financial shock where a lot of investors are running towards safer assets, right? Given the uncertainty that comes with the pandemic. So for us in Nigeria, we've recorded the worst hit since the global financial crisis to our Nigerian stock exchange in these times.
Thanks a lot. Lena, you want to speak to us a little
Yes,
bit about
quickly.
that?
Thanks for your questions, Narnia. So I would like just to highlight, you see data from the World Bank and the IMF, and they state that for the last 6-7 years, we had a very low economic growth in the developing world in general. So it's much more difficult for developing countries and emerging economies to really react positively and quickly to what is going on. Look at what happened in Brazil. We've been through a very severe economic crisis for the last 5 years, negative economic growth by minus 7.2% in 2015 and 2016, followed by 3 years of stagnation, economic growth around 1% per year. So now we have this huge blow, and of course it's a demand and it's a supply crisis that it has been highlighted by our colleagues here, and it's very difficult to imagine that this huge relief package will solve the problem, because of course we are very preoccupied with liquidity. We are promoting liquidity, making transfers to families, households, and also to companies, firms, which is necessary. But so far, if we are supposed to keep these lockdown measures and you see confinement, etc., because we don't have a vaccine so far, because we don't have any other let's say, pharmaceutical solution to this crisis, to this pandemic. So it's important to manage to handle the crisis with non-pharmaceutic measures, which is closing down schools, preserving social distance and things like this. And of course, this affects the economy. So what we need now, I think it's something that is really missing, is to address at the international level, you see how we're going to help developing countries to face this very severe crisis. And if you look to what happened weeks ago during this G20 meeting, they decided not to write off the developing countries' debt, foreign debt. And they decided that they will just suspend it for some 1 year. And of course, interest rates will increase from now to the next year when these countries will have to repay their debts. So I think that you see what is really necessary is to be able to address at the international level new measures that will be able to guarantee a global recovery. But unfortunately, I think that we lack the leaders, the political leaders, to carry on this task.
Thank you. That that last comment was very telling, and we can focus more on trying to find a global solution under these circumstances. Let's hear from Juan Carlos.
Yes, I'll be happy to add to some of the comments on the differences between this episode and previous ones. I mean, say if we compare to the 2008-09 financial crisis, well, at that time, China was strong enough. I mean, right now it's China and the United States and Europe, I mean, the main engines of growth worldwide, that are extremely weak. So that's one. Another thing is that the global value chains were perhaps not as strong then as they are now. So now this just-in-time thing with one piece, if you can't produce a single piece, then the whole chain collapses, and we have seen that. So that makes it even more severe. And now, as Lena was mentioning, we had in Mexico, say, the H1N1 episode in 2010, but that was at least a disease that you could immediately spot. But now we have the asymptomatic COVID, infected people. So that, and we don't have, as she was well pointing out, we don't have a cure, we don't have a vaccine, and this is a much longer lockdown than we have been used to, and we don't have the social system or the welfare system to take care of our informal population. So I think that makes it even more or harsher, the situation that we're living now. And another thing is that in 2008-09, fiscal situation, at least in Latin America, was rather strong, and now we have much smaller fiscal space. We have to create it. I mean, there's a lot of room to do that. But I do agree with Lena that we have to change the international financial architecture in order to be less biased against debt or countries, because I'm sure that there are going to be write-offs. I'm sure there are going to be condemnations and moratoria of debts, not this year, but as in Casablanca, not today, maybe not tomorrow, but soon and for the rest of our lives.
Thank you. Thank you very much, the panelists, for giving us some more thoughts around this. I now have three questions that have come through, and they're not addressed to anyone specific. So I'm going to read the questions, and then I'm going to give any of the panelists an opportunity to answer. Maybe some of this has already been answered, but we can still take a look at how to respond. So the first one is, all countries seem to face massive economic challenges. I think current economic challenges, but also prior economic challenges, each of these countries. So what are the most important immediate fiscal measures that governments need to take? And then it ends with a very specific question about whether South Africa is doing enough. So maybe Marius can take a look at that. The second question is, how should countries balance the demand of social distancing with the economy being revived? And I think this is an essential question, because in order for us to get onto our feet, social distancing is a problem. It's saving our lives, but it certainly isn't saving our economies. And then the third question is, how can countries rapidly move to increase digital e-commerce driven solutions? Access. So I think that was mentioned. I think both Nigeria and South Africa are doing this, and how can these solutions be explored in order to perhaps save the economy whilst keeping a social distance. So maybe I could ask Marius to start with the South African specific question, and then any of the other panelists who want to chip in to answer.
Thank you, Narnia, for that question. I think that there may be 3 points to make in response to the question. The first is that prior to the pandemic, South Africa was heading down a path of what we would call a classic low growth debt trap, where the economy was stagnant, the sovereign debt levels were rising, and the social policy measures that government was committing itself to was increasing the level of state dependence, adding to the debt of the country, without raising the productivity of the underlying economy. So that's the first point to make, that structurally, we were already headed into a low growth debt trap prior to the pandemic. Now, what has government done in response to the pandemic? What it's done is it's framed the problem as a health crisis, to which it's responded with a very aggressive fiscal package, aggressive by our own measures, because of course South Africa is a fairly small economy in the global context. It's a very small intervention compared to what the US and European countries have been able to do, but it is a fairly large 50 billion rand fiscal intervention in what it's described as a health crisis in order to address our response to the pandemic. But really what South Africa has not yet done is address the preconditions that were leading to South Africa having a stagnant economy and a rising debt burden. And so what we have said, and that we think we'll continue to say, is that South Africa needs to expand its fiscal policy, not only to address the health crisis, but this is my third point, to address the underlying structural impediments in the economy. Now, what are those structural impediments? It has to take tougher measures on the governance of state-owned enterprises and deal with things like lack of governance and mismanagement. And what that will do is raise the confidence for investment in the economy. It then has to use fiscal stimulus to drive growth in the productive sectors that have a high probability of being labor absorptive. Now, unless government combines its fiscal stimulus for the health crisis, or the fiscal intervention for the health crisis, with the fiscal intervention on the productive side of the economy, what will happen is we will begin to go into a similar spiral to what Argentina has had, where low growth with rising debt means we go through a series of defaults, which in the end put the country at greater socio-economic risk and threaten the democratic fabric of the country. And so we would want to see the expansion of the fiscal package, but not only for the health, for the broader economic story. Nani,
Sorry,
I think
on mute there. Any other panelists want to address any of these questions?
Well,
yes.
If you want, I think that for this pandemic, independently of the short-term measures that we have to implement, which are rather well known to face the pandemic, I think what we have to realize is that, say, in the case of Latin America, we have to start thinking of a new agenda for development. In the case of Mexico, we've been pushing for export-led growth for 20, 30 years. Exports performed spectacularly. I mean, they grew at 2-digit annual rates for 20 years, more or less. We very much focused on manufacturers and in the US market. So that was excellent. But however, exports were not able to pull the rest of the economy into a path of high sustained growth. So what we need to do is to, when you have a boat with an engine that doesn't work, you have to have an internal engine. To have the sails or the wind in your favor, you have to have an internal engine. And the internal engine in Latin America or in emerging markets is the domestic market. We have to put inequality at the center of the development agenda. And that has not happened in ages. So we have just focused on, say, the trickle-down approach that for export will be dynamic, then GDP will grow, then this will trickle down, and this hasn't happened. So it's obvious that the new world that we're going to face post-COVID-19 will not have a very dynamic foreign market, export market. So we have to focus on inequality. And that means a fiscal reform and social reform. And as long as we don't do that, we're going to face the same type of story over and over again.
Thanks. There was a question about technology. Mara, you said something in your presentation about that. Do you want to expand for us?
Nana, can you please ask the question about technology again?
Okay, let me just read it for you. Okay, how can we move rapidly to inclusive digital e-commerce driven solutions accessible to low-income informal workers? How can we explore these solutions? So what kind of new things can we do to bring people into the digital space, especially with regards to the economy?
Okay, well, for Nigeria, a lot of the businesses have found it difficult to actually introduce telework technology, right? But for formal businesses and medium and larger scale corporations, it's been possible. And I guess it's the same for a lot of African countries where the informal sector, businesses like artisans, they found it it's I apologize for the break. It was So as I was saying, telework technology doesn't apply to a lot of the businesses in Nigeria, particularly those in the informal sector.
Thank you. Any other comments around these questions regarding almost like economy versus health?
Yes.
Okay.
So thanks for the questions. I would like to go back to this idea that we have really to channel fiscal resources mostly to the private sector. What did we learn from the 1930s depression? We learned that the state is fundamental in addressing, the situation, in really providing means to, on a large scale, try to put the economy to run again. So I think it's really important to come back to the idea that we need public investment, as Juan Carlos has highlighted. Public investment decreased in all developing countries, also in developed countries. So this is one of the reasons developing countries and emerging economies have deindustrialized a lot. Is this acceptable that we don't even have in our countries low-tech industries in order to manufacture face masks? It's incredible. We have to import face masks from China, and we have 12 million unemployed people in Brazil prior to the crisis. Now we should have 40 million plus 50 million workers in the informal sector with no labor rights. Okay, so this is crazy. We have to, again, reshape the idea we have about developing countries, emerging markets, because it's not all about finance. We have to go back to the real economy. We have to put, the green agenda on the top. It's impossible that developing countries will continue to just export commodities like in Brazil, because of course this has also a lot of consequences in terms of, favoring new epidemics, new pandemics that will come out because we are destroying the environment. So I think it's important really to understand also that for the last 20 years, we have weakened our social protection systems worldwide, not only in our countries. Most of, social policies now, they focus on transferring cash. It's cash transfers like Mamara mentioned. This is not enough. We need to have public provision again. In the healthcare system, in the education system, we have to have teachers who have better payments, who have better salaries, better wages. So we have to reinvent our lives because we've been through 30 years of fiscal austerity with those liberal ideas that, of course, we have to put pressure on the private sector. And look where we are, we came to a situation which is completely dramatic, and we cannot even address our needs at the local level. So, it's unbelievable that we cannot manufacture face masks in our countries. Come on, this is really something that has been completely forgotten, and I think it's important to think how we're going to come out from this crisis with a true plan in order to redefine, this global order.
Thank you. I think dramatic is truly the right word here. there are quite a number of questions flooding in right now. And I think we only have until the half hour. So I'm going to ask them, and then again, the presenters can answer the ones that they feel apply to them. The first one is very specific, and that is, how serious is food availability in Nigeria? The question is in comparison to other countries. So food availability is becoming a big problem in South Africa. So maybe some of the other countries could also mention food, because hunger is becoming a serious crisis. Then Africa is traditionally regarded as a continent with weak governance. So the response to the virus has seemed to be more serious than it has been in Mexico and in Brazil. So can we give African governments credit here for the way in which they have responded to the virus? And then another question is, do we think that we are seeing the end of the neoliberal paradigm? Okay, I'm going to hand over firstly to Mara, and then we can talk about African governance, and lastly, are we nearing to see the end of neoliberalism? And then I will have two questions after that, and then we'll have to wrap up.
Thank you for that, Nanya. So how serious is food availability in Nigeria? It's getting pretty serious. So apart from the fact that the intra-state lockdown, or the intra-state ban rather, has made it difficult for food produce to be transported from states that ordinarily produce food to states that, you know, produce less amount of food, a lot of households have had a serious reduction in their income. For a country where 65% of its economic output is generated by the informal sector, you can imagine how many people are employed by the informal sector, and these people are being asked to stay at home. A lot of them don't have savings, and this has really affected their ability to purchase food supplies. As a matter of fact, the government is also providing food palliatives to states, but the extent to which that would meet the demand, the existing demand, is debatable. Just a quick response also to the so the responses of African governments, right? For a continent where the health system is not as strong as countries in the developed world, I think the governments have taken it more seriously. I mean, if the US is being overwhelmed, if their health system is being overwhelmed by the pandemic, it will only make sense for countries that have relatively less superior health systems to take it more seriously. And I think that's what a lot of African countries are doing.
Thank you. That last remark was something that we've really taken to heart in South Africa as well, with the very weak public health system and a strong private health system, and the dichotomies and inequalities there. Any other responses, especially around neoliberalism? Juan Carlos?
May I?
Yes, okay, Lena,
Yes.
and then Juan Carlos.
No, it can, Juan Carlos can start.
Lena, I already adored you, so now even more. Thank you very much. On the end of neoliberalism, what this crisis has shown is that this crisis cannot be solved through market responses in any means. What Lena was saying before is that the state is in a unique position to be able to move the resources, make the decisions with legitimacy and credibility. I mean, what we're saying and we're seeing in other countries, that if you're over 60 or whatever, you won't even have the ventilators. I mean, that's a decision that the state has to take. It's not an easy decision, but if the market takes it, I mean, that would be absolutely, horrendous. So in that sense, Yes, the discussion between state and market. If you think that neoliberalism is the view that the market can solve everything, well, right now we obviously agree that the market won't be able to solve that. But having said so, whether the state is a unique position to take those decisions and to do that, whether it had the resources and the political will to do that, that's not so clear. But as we have seen, the issue of governance, when the state is not able to solve the problems at the local level, then what we see in Latin America, I don't know in Brazil, but I'm sure it must be more or less the same, is that organized crime is very, very fast in acting in response to those solutions, to those problems. So then we have that issue on governance, organized crime, and the state. A reevaluation also of what means public versus private is evident thanks to the pandemic. We have seen that the health of a rich one, of the elite, depends on the health of its poorest members. So we have to think that I hope that the elites after this crisis do remember that if you have a worker that is sick, then you might die. So we have to rethink, I think, the issue of social protection for all. So universal social protection, universal health systems, universal education right now. Many of our kids, I mean, in the rich or middle-class neighborhoods, they do keep with their courses online, but many poor people can't even cope that. So we're going to see a very unequal world in which I hope that the elites and the politicians are able to recognize that the public-private issue is a very, very thin line, that it's not so easy to distinguish as it used to be before. And the state has to have has the key role in making important decisions on social matters, on political matters, and on economic matters. Thanks, Lena. I hope I didn't ruin the part you were going to say.
Go ahead, Lena.
Lena, you're on mute. You have to unmute yourself.
Excuse me. I would like to come back to this idea that only African countries are experiencing food insecurity. This is not true. In 2018, in the United States, which is along with Brazil, one of the biggest exporters in terms of food commodities, there were 37 millions, according, to the federal government, that were experiencing food insecurity, that were starving, that they were not having, regular meals on a regular basis, etc. So now, and at that time, the unemployment rate was, by the end of 2018, was around 3.9%. Now it's 20.6% the unemployment rate. And they have calculated that the number of individuals that will go hungry will increase by 40 more millions. So you see, this is the United States. There are cars queuing for kilometers in order to get food baskets that are being delivered by charities. Look at the UK. UK, their food banks are running out of provision. They cannot really supply the demand. The UK, the country of beverage. So it's unbelievable what we've been through. And why is this? Because, of course, we had, during periods of economic growth, low salaries, low pays. You see a lot of precarious jobs. People are not enough paid, and then they take their credit card, they go to the supermarket, and what is one of the consequences of neoliberalism worldwide? A huge household debt. Families are completely unable to pay back their debts, and they are rolling their debts using, their credit cards. So this is crazy. We have really to fix this world. People are starving. People are experiencing, even in developed countries, food insecurity because they have low pays in the labor market, because they don't have decent jobs. So we have to fix this out because the problem is not to have food banks or, to have, again, give for 2-3 months checks to families, because this will not solve their problem. Maybe they will pay back part of their debt, but the household debt will continue to increase. And this is one of the main characteristics of the financialization we've been through under neoliberalism. So again, I don't think that we are ready and or close to see the end of neoliberalism. This would really, but maybe at some point, if you are unable to really fix the economy and find another paradigm to come out of this crisis, like we did in the 30s with these political leaderships, with, you see, something that gave birth to Fordism and to, you see, the Fordist contract with more redistribution. If we are unable to fix this and come out with something really new that will incorporate, you see, those masses of workers into a more decent life and, you see, guaranteeing them a decent life, I think that it may be the end of neoliberalism, because I think that, you see, capitalism won't function anymore. And capitalism is smart enough that it will be time to fix something and to provide people better lives.
Thank you, Lena. So I'm going to ask two more general questions to the panel that come from, I think, more than 300 people who have joined us, and more than 60 questions. So obviously the time is short, and we do apologize that we haven't dealt with all the questions. I think some of them are similar or overlap, and they've been carefully chosen by our team. But let me ask two more general questions, and then I'll hand over to Elizabeth to talk about the next webinar. So these questions are general, and I would like the whole panel to respond in the order that you spoke, please. Is this the end of globalization and a post-globalization epoch? Or will we return to business as usual after COVID? So I think we will never return to business as usual, but what is going to happen to globalization? We were talking about the movement of people earlier, the movement of goods. What is going to happen to us in that respect? And then, is this crisis shaking political stability within ruling parties? What is the level of appreciation of government responses? Or are people feeling frustrated? And I would like to hear from the panel. We can start with Marius.
Thank you, Nania. I think that I'll start with the second question, if I may, and then touch on the first. Paradoxically, I think in the context of South Africa, the crisis has really been quite helpful to the president in his current position. You would know that before the crisis, he had difficulty within the party, lots of factionalism, lots of infighting, lots of short-termism from the social partners and ideological battles. And what the crisis has in fact done is to allow for a network of supporters to coalesce around the president as part of an effort to address the crisis. Now, the question that poses is, will the ruling party be able to reuse this network of supporters in the bigger issue of restructuring the economy and getting the country back on track after the crisis? I'm not convinced that the ANC in its position will be able to do that. But I think similarly, there might have been a pulling together during the crisis, and some of that could be quite useful if the leadership make use of it. And then on the second question, which is the broader one about the future of globalization, I might share a final slide which just lists some top-of-mind global impacts that we think are likely to arise from the pandemic. And I'll just touch on them briefly without any time to discuss them. Starting here on the top right-hand side, we do think that China is going to lose some of its global influence as countries in a populist way look for someone to blame for the crisis. We think in the European context and elsewhere, we're going to see an expanded role for the state. And some of our colleagues have spoken about the growing role of public investment, etc. In the case of the US, I think there are two aspects. The one is a large-scale systemic risk that is forming in the financial system, and that companies will respond to this crisis by restructuring their supply chain, which of course means that to some extent they move away from an open globalization approach. Number 4, very briefly, I do think we're going to see the nationalization of health systems, moving more towards universal healthcare in response to the crisis. Number 5, the decline of citizen compliance as citizens become frustrated with the arbitrary nature of lockdown regulations. We're going to see a refusal to comply. Number 6, unfortunately, I think in Latin America and Africa, the possibility of ongoing low growth debt traps in the economies, I think, will be a feature. Number 7, a stagnant recovery in the energy sector. And that has big implications for countries that have large export dependence on the energy sector. Number 8, as we've said, business closures and job losses, which does feed into a generalized inward-looking approach rather than a globalization open approach. Number 9, we think there'll be a growing drift towards populist accountability to say governments were ill-prepared and a demand for accountability. And then let me end with one highlight. And it goes to this earlier discussion about the end of neoliberalism. I do think there is an opportunity to take what we see as a new protectionism or localization of economies, which is a counter-globalization trend, and to use that coupled with the energy transition and with food security to create more inclusive economies at the local level. And that's certainly something that's possible in African countries. I would imagine something similar is possible in Latin America. Thank you, Nania. Let me leave it there.
Thanks, Marius. The next panelist.
So to answer the first question, is this the end of globalization? I don't think it's the end. However, I think there will be a lot of people will be looking inwards. So for Nigeria, I know there's been a spike in the production of goods that are being used to combat the pandemic, whether it's PPEs or face masks, even food produce that would ordinarily have been imported, they are now being produced locally. And it's also translating to other sectors. So textiles, leather, there's also been a spike in local production of those commodities. Then the extent to which the level of the government's response is being appreciated. In Nigeria, there's almost like a hunger versus health safety debate, right? So people feel that if they stay home, hunger will probably kill them before the virus kills them. And so they feel that the government is not doing enough, obviously, for them to obey the lockdown measures. And this is also translating into civil unrest. We've seen a spike in burglary. In states like Lagos, we've seen a lot of incidents in recent times. And that's could, bring about a bit of political instability.
Thank you. I'll leave it to our Brazilian and Mexican counterparts to end off.
Lina goes first.
Okay.
Lina, you're again on mute. You have to unmute yourself.
No, it's unmute. Okay, so back to this question on globalization. You see, if we come back to Brodel, Larrick, we realize that, you see, we've been through different waves of globalization since the 15th century. So it's not really new. And I think that developing countries, emerging economies, we all need to participate in global markets. But we have to change the rules, because in the past, the problem with the incorporation of developing countries into global markets related to the deterioration of terms of trade. Now we have other problems, like you see this hierarchy of currencies, the way you see we decide about regulation. So I think we have to come back to different regulations and try to address issues relating, again, to the debt of developing countries, which is extremely important. And you see how we're gonna value those chains, those value chains that are located in developing countries, look what China is doing throughout Africa. You see, they're investing massively. So how should it happen? You see, are the African countries' priorities being respected? And the deals that are made between these countries and China, do they really favor the developing countries? So I think that we really need a different global order. The problem is not, you see, to interrupt globalization, but to make it fair to everybody. And finally, I'd like to go to this idea, you see, of maybe, of course, we also need to regulate the financial sector, because you see, we have this massive wealth, financial wealth that is produced and to the detriment to the real economy. So it's extremely important to come up with new rules for financial transactions worldwide. And finally, I'd like to go to this issue relating to, you see, populism. Why did people voted, you see, in the past 10 years for far right-wing governments in Hungary, Turkey, Brazil, the United States, Poland? Because they were so disappointed, they were so frustrated, you see, with the political system. So it's important to fix the political system as well. And this is a national issue. So the problem now is that we have a lot of tasks that have to take place at the same time. And again, for this, you see, we need progressive leadership in our countries. We have, again, to commit people to engage, you see, in transforming their daily lives and to participating. And people have been so disgusted, you see, by politics that they decide, okay, I don't want to participate anymore. Politics is all the same. You see, they're all the same, never changes. So this idea that we have to fight the system is what brought Trump to power, Bolsonaro to power. So again, we have to reinvent the way we do politics. So we have a lot of things to do at the same time.
On the same issue, I mean, if we look at what's happening now in the United States or in some countries that have already opened, sort of not in a normal way, but more or less. Well, right now, the United States auto industry wants to open the Mexican economy because they think that the global value chain needs to restart, and whatever happens with Mexicans to Mexican world, bad luck. So that one thing. So I think that sometimes our wishful thinking that things will change very soon and very fast, it's a wishful thinking because the interests of corporations are very, 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 very powerful. So that I don't know. I do agree that we one of the lessons or one of the things that must change is the international financial architecture. We need to have regulation of shorter capital flows. We need to have a much less biased system against debtor countries. But that's also perhaps a wishful thinking because right now we have seen that the IMF cannot rub us or strengthen the SDR system, so which is already needed. But then I don't know. And now about politics. It's too soon to call the shot in Mexico. Well, we are in phase 3. The curve is still going up. We have 2,500 people, deceased people, thanks to the virus. And we don't see the corpses being dumped in the streets as in other, say in Ecuador, which is always on our TVs. So people tend to think, I mean, the approval rate of President López Obrador is going up. But what will happen in a few months, I don't know. Remember that Evo Morales has been the most successful president in Latin America in terms of the fight against inequality and against poverty, and he was ousted of the government due to political reasons. So fame and political approval are very strange. It's a very strange animal that you cannot really tame it. And if you think you do so at a time of such a big crisis as we are facing now, it's a very dangerous that the animal may really bite quite soon. And also I think that when we think about the approval of politicians, we must also look at the approval rate of political parties. in some of our countries in Latin America, the view on political parties is disastrous. It's like, well, who needs them? But at the same time, they are the institution of democracy. So I think we're bound to see a very, as they say, may you live interesting times. I think we're going to live very interesting times, and I'm very happy that I'm not a politician on the one hand, but I'm very angry that I'm not a politician because I could perhaps be in the position of changing things. Thank you very much for inviting me to listen to you. It's been great, and I hope that we can have the video and to share with my students and with my colleagues. It's a fascinating world. I hope it keeps being globalized in the sense that I can see Marius, Mamara, Narnia, Lena, and the rest of you soon.
Thank you, Juan Carlos. I just want to also reiterate what you've said. I think that this panel has really been phenomenal. And it would be very good for us to continue this conversation. I want to thank very much Marius Oosthuizen from South Africa, Mamara Erekuche from Nigeria, Lena Levinas, who's from Princeton, but was speaking about the dynamics and the dramatics of Brazil, and then Juan Carlos Morena, who gave us insights into what's happening in Mexico. We are living in strange times. We're living in interesting times. There's a lot to talk about. There's a lot to wonder about as people become more restless and increasingly concerned about not only their health, but also their jobs. So thank you again to the panel. Thank you to everybody who has joined us. And I'm going to then say goodbye from my side. I hope to be involved in these conversations in future, so that's a hint to the organizers. And I'm going to hand over to one of the organizers, Elizabeth, to end off for us.
Great. Thank you very much, Nanya, and thank you from our side also to all the panelists and to all the participants. It's been we've been overwhelmed by the questions and the comments. And of course, a number of the participants have asked whether these will be made available electronically, both the recording of the event as well as some of the discussions. And while I am technically challenged when it comes to these things, I understand it is entirely possible to have both the webinar chats as well as the recording available. So we will be doing that. What we're also going to do is that there are obviously a number of questions which probably are more easily handled through written responses by the panelists, and we're going to try to address some of those too. As Nanya mentioned earlier, we had sort of, in the Q&A over 53 questions, and in the chat also a number of comments as well as questions. So it's really impossible to tackle them all, and I'm mindful of the fact that we're now over time. Just a point to remind you all about the webinar happening next Tuesday, same time across the time zones. The webinar next week will focus more on international and regional issues. So some of the discussions that we've already touched on today around global governance system, but also around regional responses. For example, there were a couple of questions also about how the African Union has tackled COVID-19, and so that will form part of the discussion next week, as well as the broader canvas of some of the dynamics and challenges between countries, the sort of the superpower and the emerging superpower, so the US and China. And again, this will be brought to you in partnership with the BRICS Policy Centre and the Konrad Adenauer Stiftung. Again, we look forward to that engagement next week, same time. I don't know if Paolo or indeed whether Henning have anything else to say, but wishing you all a good afternoon in the case of Latin Americans, and a good evening in the case of my South African and other African colleagues.
Thank you all for coming today. And as Elizabeth said, we hope to meet you again next Tuesday. Thank you.
Thank you
Also,
for
maybe from my side, briefly, on behalf of the Konrad Adenauer Foundation, thank you very much to the organizers, the BRICS Centers, and Saya, and of course also to the panelists. A very insightful conversation, which a lot of food of thought, and I'm sure that developments are taking us to a place where we will have many, many more other discussions on COVID and where this thing will take us. So thank you very much, and I'm looking forward to the next conversation.
Thank you, everybody. I think that concludes the meeting.
Thanks, everybody. All the best.
Bye-bye.